Now, if you look back at our 75-year post-independence history, what we have had is fiscal domination of monetary policy. Successive governments had difficulty in running fiscal policy in a responsible and sustainable way. And then they relied on the central bank to bail them out, either through direct deficit financing or through financial repression by the central bank, which kept interest rates low for the governments to be able to borrow cheaply. All these things actually dislocate the economy and create disturbances in the economy. Now, we've had a discussion on those matters, so I don't want to repeat what has been said. So now that we have this fiscal forbearance in monetary policy, one needs to find ways of creating sufficient space for the central bank to do its work in a technically proficient way. Now, having said that, if you look at the Act, the central bank does not have policy autonomy. Far from controlling fiscal policy, it doesn't even control monetary policy. Because the inflation target, which is at the heart of the monetary policy formulation framework, is actually set jointly through consultation between the Ministry of Finance and the central bank. And the inflation target is actually announced by the Minister of Finance through a gazette. So you can't say that the central bank is kind of going off and doing its own thing. And so there is no real policy autonomy for the central bank. Of course, it has a big say and a big input into setting that policy target, inflation target. But what it does get now, to a greater extent, is instrument autonomy. So that it is able, once it's given the target through the government gazette, issued by the Minister of Finance, it has autonomy in the way it runs monetary and exchange rate policy. So there is no question of the central bank superseding the political authority of the country. Because as I said, the policy framework is set by the gazette notification issued by the Minister of Finance. In terms of the relationship between the money supply and inflation, now from my understanding, if the rate of growth of the money supply is faster than the nominal growth rate of the economy, I don't see how there cannot be pressure on prices. Because if you see that the money supply is growing faster than the nominal value of goods and services in the economy, then there has to be some give in terms of the price level. So I don't think one can say that there is no linkage. But as Dr. Coomaraswamy pointed out, the central bank recognized that the relationship between monetary aggregates and inflation had got much weaker, and it had abandoned setting monetary policy by using monetary aggregates as the base. And Dr. Coomaraswamy explained how it has conducted monetary policy. If you make the point that inflation has been there all over the world recently, that is absolutely true. The supply side factors have pushed inflation up all over the world. But I'm not aware of many countries which have had 85%. So you have lots of these supply bottlenecks, all these various other factors which have affected Sri Lanka and other countries. But then why did ours go up to 85%? So that I think is something that needs investigation. I haven't done the work to be able to say that a large part of it is due to monetary expansion or deficit financing, but it's something I think that we need to look at. Why did ours go up so much? Way above almost every other country. Then, capacity for counter-cyclical policies. Clearly that's very important. And like the countries hit by something like the pandemic or collapse in export markets, whatever it is, and we need to then have some capacity or significant capacity to be able to have counter-cyclical policies. One way, of course, is to get the central bank to do deficit financing. Colloquial parlance, deficit financing. But there are other ways of doing it, most notably to create arbitrage opportunities for open market operations to become attractive to the market, right? Because when you have some kind of depression in the economy, private sector credit demand will also be less. You won't be crowding out the private sector to quite such an extent if you do open market operations to take money for the government.